The markets have had a strong run recently. I mean, but the global cues, they have been a pain point, which is leading to some bit of a correction in the last couple of sessions. But one pocket of the market, Avinash, continues to do well, and that is the non-banking financials. I mean, look at the stocks in this space. They had been under pressure, in the last few months amid RBI curbs, but in the last couple of weeks, stocks have risen by almost in double digits. Some of these stocks are up almost as much as 10% in just a matter of 5-6 sessions. What do you think is the reason behind this reversal in the sentiment, sir?
Yeah, first of all, good morning, Suyash. My sense is, I think NBFCs are now again in the limelight, followed by banks, largely because, now the credit policy, which is going to be out on the 5th of April, I think is going to give some indication about the kind of trajectory on inflation and interest rates going ahead. I think the market is expecting that possibly if there is a rate cut in the month of June or July, then I think, to a large extent, these NBFCs would find that their cost of funding would obviously get more competitive. It would lead to a little bit more margin accretion. Because, on ground, what we are finding is that demand has now reached almost pre-COVID levels. If you look at most of the larger NBFCs like Bajaj Finance or typically even Shriram Finance or typically, larger, companies which have got decent AUMs and which have got a larger geographical base. I think there's been a rigorous appetite again to go for consumer durable financing, small item financing, and that is actually driving a lot of growth. So my sense is that you could see a lot of companies, once they declare their March numbers, their commentaries could be quite encouraging. And I think we could probably see a good amount of re-rating in some of the larger as well as the medium-sized NBFCs, despite the fact that competition is increasing. But I think if the rate cut happens, Suyash, I think that would be a key, kind of driver which the market is looking forward. So I think markets are anticipating that maybe this time the rate cut may not come in this policy, but at least in the month of June or maybe July, hopefully, the rate cut cycle has to begin. And if it starts, then it would be, elongated for a fairly long period of time. And that would obviously improve the margins, that would improve the business growth for most of these NBFCs, which are now, showing decent signs of an uptick on the business side also.
All right, NBFC stocks could continue to recover because I mean at the end of the day they do provide financial service for the unbanked. But another particular stock in this space, Paytm, is in the news. According to media reports, it has resumed lending activities after a temporary pause of almost 2 months, starting with merchant loans in partnership with existing allies. Now back in March, it had tied up with select banks to continue UPI service. I mean, Avinash, coming to you, is this the future for Paytm, a third party service provider? If so, how does it impact their earnings?
No, I think, Suyash, we yet have to understand the full impact of the RBI ban, because unless and until the RBI ban is not lifted, I would believe that, the kind of commentary which the company had given earlier, that by September 24, they would become EBITDA positive. I think that remains a key challenge. And I think post March numbers, once the fourth quarter numbers are released, the company holds the analyst call. I think one would definitely like to know from the management that what is now the near-term strategy the company management is looking at. My sense is that these are small interim kind of measures which the company is doing. The bigger issue is that the RBI ban has to get lifted. Only then we could see profitability getting back into much more a decent kind of curve. So I think these kind of news flows are unlikely to re-rate the stock in a big way. I would still reiterate investors that it's better to wait for the management commentary and some more clarity to come in, because these things are not going to overall improve the business structure as a whole after the RBI ban. So I think it's a wait and watch as of now. We would not be comfortable to buy even at these levels. We prefer to wait for at least a couple of quarters before the entire dust settles down and we see a clarity from the management side that business is back to normal. Because till that time, we are going to see a lot of uncertainty on the Paytm stock.
All right, and Avinash, you said that RBI could perhaps lift the bank on the payments bank. Is that a possibility? Because from what I am reading, I mean payments bank is essentially dead.
It is. It is. Actually a fact. But then my sense is, we don't know what exactly has transpired, behind that, and what kind of measures will RBI take? Will they finally cancel Paytm bank's license altogether, or will they allow them with some restrictions? Now these are things, Suresh, which I think nobody can answer at this point of time. But I think you need to give at least another couple of quarters before you could see that reasonably that business gets back to normal and resumption of business starts. As of now, most of the investors who have invested in this company are now completely helpless because they actually don't know on the ground what is happening. And I think that's why the fourth quarter numbers and the commentary and the con call which would take place is going to be very important, because a lot of investors, specifically the larger institutional funds and investors, would definitely like to know what is the management's thought process and the strategy going ahead. Because see, management is defending obviously all these issues, but clarity has yet not come.
Good morning, Mr. Gorakshakar. Now it's the first month of the new financial year, and there are as many as 15 companies that are coming out of their lock-in periods, whether it is 1 month, 3 months or 6 months. Now, going by the textbook behavioral patterns in these matters, there will be a lot of selling pressure on these stocks and in the markets because of that many stocks coming out of the lock-in period. When I look at their performances in the recent times, whether it is RK Swami or Mukka Proteins, most of them are in the negative in the last 5 days at least. Some of them, give or take, Crystal Integrated or Plaza Wires, most of them are not performing too well. Is it because the big players, anticipating a selling pressure, push these stocks into a bearish sort of zone just to avoid the selling pressure in these times? It's a sort of an academic question for you.
No, I think normally, when the lock-in period opens and the share has already been traded at a significant premium, then I think obviously, most of the anchor investors, who have that lock-in, plus, other investors who have invested, then obviously they try to encash their gains in the market. But I think, assuming that most of the stocks which you mentioned are already in the negative and they are below the IPO prices, or some of them are already into loss, at that point of time, I would not be surprised that some of the funds may consider, holding on for some more time. They may not try to book a capital loss immediately. But my sense is that typically on an academic side, whenever such lock-in opens, there is some temporary pressure on the stocks, because a lot of floating stock takes time to get absorbed by other investors. And I think you also need to understand that who are the new buyers who actually absorb this floating stock. If the floating stock goes purely to retail, then there is hardly any valuation. But if it is some new fund or some new FI which gets in, then I think some stability in the prices of these stocks do happen. But yes, when the lock-in happens and it opens, at least for the next 1 or 2 weeks, you are bound to see some selling pressure, which is a normal customary thing. So that is something which no investor can avoid. So you got to go with the tide.